OCC backs digital asset bank. Charters as new path opens. The Office of the Comptroller of the Currency is pushing to revive new bank chartering and is explicitly backing digital asset firms as candidates for those charters, according to an August 12th report from Cointelegraph. The regulator also commended the Federal Deposit Insurance Corporation for its own reform efforts, signaling that two of the main federal banking supervisors are moving in the same direction at once. The framing matters because chartering is the gate. A national bank or trust charter from the OCC is the difference between a crypto company operating as a state-licensed money transmitter across dozens of jurisdictions and operating as a federally supervised institution with one primary regulator. For years, that gate stayed mostly shut to digital asset firms. The OCC now says it wants to open it. A dormant pipeline restarts new bank formation in the United States has been near a standstill for over a decade. Very few de novo national bank charters have been approved in any given year since the 2008 financial crisis, and the ones that cleared were almost never crypto-native. The OCC's stated intent to revive chartering is aimed at that backlog broadly, but the explicit mention of digital assets is the part the industry will read closely. A federal charter would let a qualifying firm hold reserves, custody assets, and in some cases access payment systems under national supervision rather than assembling a patchwork of state licenses. That is the same structural prize that stablecoin issuers and custodians have chased for years. Getting there still requires meeting capital, governance, and risk standards that most startups are not built for, so the near-term list of realistic applicants is short. Two regulators, one direction. The OCC's nod to the FDIC is worth separating out. The FDIC insures deposits and supervises many state-chartered banks, and its posture toward crypto has been a recurring friction point. When both the primary chartering authority and the deposit insurer signal openness in the same breath, it lowers the odds that an approved charter gets stranded at the next agency. That said, coordinated intent is not coordinated rulemaking. Nothing described here is a finalized rule, an approved application, or a named institution. This lands alongside a broader thaw in Washington. Congress has been working through the Clarity Act as a bipartisan package, and the SEC has floated tailored offering rules for crypto investment contracts. A more welcoming chartering stance from the OCC fits that pattern rather than starting it. The path for crypto firms in the U.S., for companies that already run compliance-heavy operations, a charter changes the calculus. Custodians, stablecoin issuers, and settlement firms would gain a cleaner regulatory identity, which tends to unlock banking partnerships, institutional clients, and lower legal overhead. Firms weighing whether to keep expanding overseas, the way Coinbase did with its Abu Dhabi license, now have a reason to look again at building inside the United States. For everyday users, the effects are indirect and slower. A federally chartered issuer behind a stablecoin carries different counterparty risk than an offshore entity, since federal supervision brings capital rules and examination. Card programs and crypto cards that settle in stablecoins ultimately depend on the solvency and licensing of the firms issuing those assets. So a charter regime that pulls issuers onshore can tighten that link over time. None of that is guaranteed by an announcement of intent, and a charter does not eliminate risk. It changes who is watching and under what rules. The skeptical read is straightforward. Reviving chartering has been floated before. Applications take years, and a supervisory posture can reverse with the next administration or the next comptroller. Digital asset firms that assume a fast federal on-ramp based on the signal are getting ahead of the process. The measured read is that the OCC has removed a rhetorical barrier and invited applications it previously discouraged, which is a real change in tone with unproven follow-through.